crude oil, and then let's do stocks, all right? Crude with the nice session.
There's always an up market. There's always an up market, and today it's in crude oil.
All right. Hey, depending where you start, the bar for stocks, it's kind of up off the low. But hey, let's talk crude, all right?
Right.
Because we're up 3% today, despite a build, second week in a row from EIA. What gives?
5.5. Just make it that simple. 55, market slid down to that level. That's the halfway point of the range we've been in, mostly between 50 and 60 for the many last months. Yes, we had that fake out breakout with that Saudi Arabia attack, but other than that, we've been range bound, and we stalled at that 57.5 level. And so you saw a little bit of pullbacks and profit taking, but people found some value. And you want to tie crude oil to stocks because I think it's a big macro market play as the concerns about global growth slowdown alleviate, then that can give the crude oil a little bit of breathing room.
So, Alan, here's what I think is so interesting about crude, is that while stocks do this crazy back and forth on the trade stuff, our intraday move for crude, it looked like they were living in a different world. So, I don't know, I could make the case that maybe crude doesn't care about this U.S.-China situation, and maybe it's range-bound because the economic data's been range-bound.
That's a good theory. I'm a price guy. What I saw was a big bounce off that support level. People leaned on that level, and guess what? The shorts
55.
were caught. So exactly. So they squeezed it, that 55, that halfway level. In the big picture, we've been trading, like I said, between 50 and 60 since May, but even bigger than that, it's been between 45 and 65. So 55 is a halfway point of that big picture as well. So for whatever reason, it seems to be a very important pivot point. So I look at it as a lot of technicals. You talked about, the inventory numbers, and, I guess people can look at it two ways, that, they were expecting one thing and it came out the other, but, the market rallied. So again, you gotta focus on the price action, and I look at it as a positive after we have had a couple of down days, really.
Yeah. All right. So for crude oil, when do you become impressed? I mean, the bounce off the 5.5, but what level becomes impressive to you where you want to bet on higher prices in a real breakout?
Well, I'm still bullish, and I'm using these opportunities, and I've been bullish for a long time, but it's been more of a patience trade than anything else.
Right.
It hasn't been able to push through. If it can push through that 57.50 and then to that 60 breakout, that targets, again, just do the math on that. Between 50 and 60, that's a $10 range. $10 on top of that $60, that targets 70. It wasn't that long ago we were at 70, and if you look at the money flow, you're going to see money flow move into those energy stocks that have been left behind, that have been downtrodden and depressed, and you're going to see the oil market as an opportunity from a reward to risk standpoint. The stock markets are at all-time highs. Crude oil is kind of sideways. There's more upside potential for crude to have a little bit of a catch-up here.
Yeah. Okay. Now let's talk the stock part, all right? Because, Alan, I think, again, this is one of those days where, it is, I call it the Rorschach days, right? Because on the one hand, you go, hey, this market's exposed, a negative trade headline, and we drop. But then you could also go, hey, we only dropped, marginally away from an all-time high, and we bounced right back.
Exactly.
Well, not all the way.
We've got back half our losses.
Yeah,
we got back half our losses. And that's what I've been saying here. We want to see how the markets react when we have some sell-off. You want to see how buyers step up into the situation and look at it as opportunity or not. So you're not seeing any sustained sell-offs. The last couple of weeks, it's been new high after new high after new high. Let me give you a couple numbers. 20, 25, 30.
Okay.
So it's a series of numbers. It's the Dow, it's the S&P, and it's the NASDAQ. So that's the NASDAQ. Those are the percentages in 2019. So, we are in a bull market. Let's remind people that. And I've talked about with you for a long time, my upside target in the S&P is still 3,500. So we still have more upside. Again, it's about waiting to see if there are pullbacks or profit-taking rounds, how the markets react. And today was just a very minor, a very shallow dip. But how many weeks in a row have the markets been up overall? Very, very strong. And, I'm looking for that to continue. We're through earnings season now, so let's see if we get a little bit of nervousness. But as we've seen in the past, that's been a buying opportunity.
Hey, keep talking, Alan, because you're bringing stocks higher as you do it, okay? Last point is, so the takeaway here, as a bull, do you feel emboldened by the market's response to trade today, or does it point out that we're still exposed? Where do you fall on the Rorschach?
I feel that we are always still exposed to a heavy profit taking round, but that will be an opportunity.
Okay.
So like I said, today was a very minor opportunity. I think there are plenty of stocks, and I alluded to some of the energy stocks.
Yeah.
I like the pattern performances of like a Halliburton. We saw a Schlumberger bounce today. So if you look at some of those stocks that are down 20, 30, 40%, where is the upside? Where is the downside risk? I think there's more upside potential and things like that. To go back to the China story, a good example of a stock to play there that I like right now is JD.com. It got to the 35 level, all right? It'd been trading between 25 and 35, mostly here for the last year. So it got to the upper edge of the range. It's backed off a little bit. Today was obviously hurt by the China news. But a breakout of that 35, which is also the halfway point of the action of the last 3 years. So that would be a significant technical level to take out, a threshold to take out. So I'm looking at something like the March $30 call, give myself some time, something in the money, looking for JD.com to make a move. That stock was at 45 not so long ago. So, if it can get at that 45 level again, that's 30% higher. That option would do fantastic. That's how I like to position. That's something that really has kind of been left behind, but those are the plays I look for. There are plenty of stocks that are not on the leaderboard that I look at as opportunities.